Hi, I'm Sam Miller of RE/MAX Stars Realty. I'm with Derek Good of Equity Resources. And this week's quick tip for real estate, I've got a question for Derek. Derek, we've had cases where people have went to other lenders and the lender has denied them. They've said they don't currently qualify to obtain a loan. How can you help them?
There's a lot of different things we can do. First of all, it's no big deal if you get denied for a loan.
Sure.
That's between me and them. That's it.
And no one else knows.
No one else knows. A denial is not reported on your credit bureau. That's another fear that I see people have. They're afraid to apply for a loan because they're going to get denied, then other people's going to know about it.
Sure.
They're not.
No one's going to know.
No one's going to know. It's between me and them. But that's the first step, because if you are denied, it's not a denial. You're not even getting denied if you're just shopping for a home. If you're shopping for a home, you're asking to get pre-qualified. A pre-qualified is, I'm either approved or what roadmap I can give you, okay? And that's where I'm gonna step in. So we're gonna have a conversation about your credit if we can't help you now, because what I'm gonna do is work with you in the future.
So you're going to give us basically a plan of what changes that they would need to make in order to qualify?
Yes. So, and then when we go through their credit, here's the things that we're gonna look at. Current delinquencies, because people don't realize what affects their credit. So current delinquencies affect you the most. So they think, hey, I bought a golf shirt at JCPenney. It was $35. My minimum payment said $10. I'll make that next month when it's 20.
Oh, and they let it go a month too long.
Yeah, so even your small charge cards, kind of a large bearing on what your credit score is, because current delinquencies affect you the most. So when I'm going over a roadmap with somebody, what we're gonna do is look at what's reporting now. That's what we're gonna focus on first. But then we're also gonna look at the windows of credit. The only thing that affects your credit score is the last 24 months credit history. So the windows are current delinquencies affect you the most, and then delinquencies from 1 month to 12 months, then 13 to 24 months. People call me and they get discouraged. Hey, I paid all this stuff off. I'm not seeing an increase in my credit score yet.
And it takes time sometimes, right?
Sometimes it does. But that's why you also have to look at the different buckets. Well, if they paid something off 11 months ago, it's still in that 1 to 12 month bucket.
Sure.
Still has a kind of heavy bearing. Well, a month later, it might be in that 13 to 24 month bucket and not have much of a bearing on their score.
So what you're saying is someone today, if they had a balance that was delinquent maybe 11 months ago, a month from now, it might be viewed differently on their credit score.
Yes.
So that could help them.
Help them a bunch.
So that's why it's so important for them to have their credit report updated with you, isn't it?
Absolutely.
Okay. Derek, one of the things that I see a lot in our business is I see online lenders that it's a numbers game for them. They take as many applications from people as they possibly can, and the ones that they can't help, they just kind of throw aside and don't do anything with. You're unique in that if you can't get them in the door approved to buy that house, you're going to be able to help them get approved. Tell us a little more about that.
Yeah, there's a lot of things that we look at on approval. Even for someone that is approved. Let's say someone comes to me that has a 679 credit score, is approved. One of the first things I'm gonna ask is, how soon are you looking to buy a home, okay? If we're looking to buy now, great. We're gonna proceed with a pre-approval letter, and I'm still gonna give them tips to increase the score, because what we're looking at is not only get them into an approval, but also get them into the best approval. Because when you're looking at interest rates change. Now this is a general term, but you can see a change in interest rate at about every 20 points in your credit score.
The higher my credit score, the better my interest rate could be.
Absolutely. Let's say, just as far as general terms, if an interest rate could have a change every 20 points in your score, okay? This just start at 660. So you're in the bucket that's from 660 to 679, okay? What if your credit score is 678? You're still gonna get approved, but you may be paying a higher rate because of your score. So we're gonna start looking at your credit together. Do we have a Visa balance that's over one of the buckets to get you into a better score, at or above the limit, if you're below 50% limit, or if you're below 30% limit? So what if when you applied, you use one credit card for everything? And by using one credit card, you may push it up towards the limit. You apply with me, say, hey, we're in June, I'm looking to buy a home in August. I'm like, hey, do you know that your Visa has a $1,000 limit and you're right at $1,000? Are you able to pay this down a little bit? Just by paying that down some, that could get you the 2 points you need to get you in the next score bucket.
Meaning get a
you
lower
the
interest
lower
rate. Yes, they get a lower payment if they did that. So that's a good strategy. So let me ask you this then, in a situation like that, where they're like at a 678 that you mentioned, if they went to a 682, they're going to get a lower rate. That's what you're saying.
Absolutely. They're going to get a lower rate. And what if they were in a different score bucket? So what if they were in the 640 to 659? Okay, what if they're in that bucket? That's a huge difference in price and a huge difference in programs.
So if they had that $1,000 credit card and they had the balance charged up the full $1,000, if they paid that down where it was under 500 and they were less than 50%, that alone could boost their credit score up.
Absolutely. What if their $1,000 limit credit card, they use it for all their purchases during the month, but they pay it off every month? That's one thing people don't realize. So I do that personally. I use one credit card for all my purchases during the month. What I have to be careful on in doing that is I have the balance to justify that. Sure. So I'm not telling everybody to go out and charge up more debt or not go out and increase their credit cards. But if they're using a credit card for all their purchases, make sure they have a high enough limit. So if your purchases are going to be $1,000 every month, make sure you have a $2,000, $2,500 balance, because you never know when that creditor is going to report to the credit bureau.
Well, let me ask this question. Someone that maybe has 2 credit cards and they've got one that's the credit limit's 1,000 and they owe almost 1,000 and they have another one with 0, it seems to me that they would be better to use the second card that has 0 and ease up on using the card where they've charged the full 1,000 so that their scores, you're going to have the balances are going to be much lower on each combined. Would that make sense?
Yes, it does. What we don't want to ever tell somebody to do, though, is increase the balances, the limits, to make their balances lower. That's not going to help them.
Understood. But if they had lower balances, if they owed less than half of what their credit limits are on each of those cards, that would be better than having one that was charged all the way up. Is that right?
That's correct.